Forex market?
To be honest, in the Forex market, I've been around 6 to 8 months, but with me, it's like I'm trying to like with me, I'm not like consistent or profitable yet. Just
Mm-hmm.
um still trying to grow my account, trying to find a good strategy to be honest, if that
Yeah, I
makes
get it.
sense.
Yeah, you of course you
Yeah,
do, bro. Of course you do.
yeah, still struggling and making losses along the way. But
Mm-hmm.
obviously, I've got to accept that as a factor because that can't be an excuse of me giving up, if that makes sense.
Of course, of
But
course. Mm-hmm.
obviously, I've taken many courses and I've loved to learn new courses and actually pick which one's the right one for me, to be honest. And
Mm-hmm.
yeah,
You learn not to chase the trades. You learn to be patient and wait for price to come back. So if I were to enter this trade again, if I'm gonna enter this trade, I'm gonna wait for price to come back to this area again, and then I'm gonna decide whether I want to buy it or just wait, because there's always it already moved, but there's always a possibility for it to come back and retest this area once again before actually his overall trajectory is actually for this currency pair to continue bullish. If you notice, price is actually on an uptrend here, right? If you see
yeah,
higher lows, higher highs. At this point of the market, we saw a bit of consolidation. I consider this to be consolidation because well, this trend here is actually an uptrend, but this right here, I see this as consolidation, the overall picture, because it moved
yeah,
sideways and then eventually broke and then came back into structure, right? So we still see on the daily chart, we still see higher lows, right? Higher lows, and we still see higher lows here. So this is a potential higher low here. It wasn't able to break this structure, but it was able to break this previous consolidation structure here, right? So
yeah,
what he's pretty much looking forward to is for price to um, come back and test these highs here. So that's how I would actually put my trade. Like, this is how I would set up my trade and wait for price to come back down here once again because it already moved. If you were to enter the trade right now, you'd be actually a little bit in too late, and you might have drawdown like for a long time, because the
yeah,
market may move up, just like, continue its trend up, or like I said, it may come back down once again or a couple more times and then move up. So you don't want to enter this trade right now. You want to go down to the lower time frames, like for example the 4 hour. So that's basically how I look at the market, bro. I look for structure. I look for raw price action. I don't use many indicators, as you can tell. Like, every once in a while, I'll slap in the RSI, I'll slap in the MACD, just for that strategy that I'm looking for, because
yeah,
since there's always different market, like, how do you say, market conditions, like there's always different market conditions. You're always going to have to find a way to see what strategy fits best for that market condition, because you might have a strategy for a downtrend and then we're at a reversal point and you're thinking it's going to continue on a downtrend and your strategy failed because you failed to see the reversal depending on that strategy, right? It's like a boxer, right? Let's say, for example, Canelo fought Mayweather. He fought Mayweather, and then his next fight was going to be Cotto. Let's say Cotto. So he approaches Cotto with the same fighting style he approached Mayweather. There's a high potential he's gonna lose because he's approaching him the wrong way. You feel me? So it's the same thing with the
yeah.
markets. You have to approach them the right way. You have to see exactly, what it is it's trying to tell you. Like, right here, what do you see? What would you tell? What would you say this is for you right here? Don't think like a retail trader. Think like a broker. Think like a bank, a big person, a big fish. This right
Well,
here, to you, what is that? What is that on a 4 hour chart? What is that? What does it look like to you?
to
What
be honest,
pattern?
through my strategy, this could be looking like a little, what do you call it? A symmetrical triangle, if that made sense.
Okay, let's
Symmetrical
see.
triangle, but it has been in a downtrend for some time. So this could still go to the upside. There could be like a big jump to the upside.
Hmm?
But I do see a rejection in the zone that you've drew. There are two places where price has rejected. So basically it's rejecting that area. So that's another confluence why the trade would go to the upside.
Okay. Nice. I like that. I like that way of thinking, man. You're actually pretty damn right. You're pretty damn right. I also do a potential double bottom as a pattern of confirmation here.
Yeah.
This right here, I do see the two. Actually, I see about 3 or 4 rejections right here. I see
Yeah.
for one this rejection. I see this candle wick rejection, and then I see this other wick rejection, and I also see a full body, bullish candle here, right here that closed pretty damn strong, right? And then we've seen this fail to break candle here. It's called a FTB candle, because it failed to break this level, and it was a strong bearish candle. There's a big body here, right? And then there's a wick from the upside, pretty much rejecting this zone here. And
Yeah.
look at this candle. This candle currently, as we sit, its current market price, it's actually currently respecting this level here, right? So we want to wait and see how the market actually reacts to this level. So if we drop down to the 2 hour, we could get a better picture of exactly what it is it's trying to do. And price is still below this level. You see this level here, this
Yeah.
candle close. All right, so we want to wait. We want to see if it's gonna break this candle close. If it does break up to the upside, we want to wait for a little small retest, and then you could actually buy for a scalp here, right? Maybe testing
Yeah.
these higher lower highs up here, or potentially this swing high up here, right?
Yeah.
So our bias is actually for the upside, right? Our bias is for a buy here. So I'm actually gonna move this pretty much like right there. And if price comes down back to this area here, pretty much in my eyes, it triggered a buy limit, right? And then
Yeah.
if it goes up, we're in profit. So I learned from that. I don't necessarily take every trade. I don't over trade. I take maybe possibly about 5 to 6 trades every week, bro. And all
Yeah.
you need really is possibly like 2 trades, 2 badass trades, and you have a week's worth of check. It just depends on your capital, other factors involved. But overall, that's pretty much how I look at the market, bro. I look at previous structure lows, structure highs. I look to see if price is respecting those previous structures. If it doesn't, I'll make a decision whether I want to buy or sell.
So
As far as, uh-huh.
are you like a what type of trader are you? Like a
I'm
scalper?
I'm a, I'm both, bro. I'm actually both. I'm more of a swing trader though. I do tend to take scalps here and there,
Yeah.
but I'm more of a swing trader because whenever I do leave my positions open for more than 2 days, I tend to notice that it's actually a higher reward
Yeah.
than if I were to just scalp.
Yeah.
But I do consider myself to be both. But eventually, I just want to be a strictly swing trader. I just want to put my positions down and let them do its thing. I don't want to have to sit on the chart and look at it.
Yeah.
Yeah.
Yeah. So has this strategy has it been going good for
It's
you?
act. This is the reason why I'm actually this. The reason why, like the way I look at the market now, is the reason why I'm able to actually get better entries. My trades are actually more profitable. Um, if I do get stop hunted or stopped out or whatever, faked out, it's no biggie. Not like before when I used to be like, fuck, I just took a loss. Like, how do I get
Yeah.
back from this? But now it's just like you live and you learn. You lose, you take that as a lesson. You go back to it, you learn from it, and you just carry on. You move on. And that's why risk and reward management is actually very, very vital for your trading career, bro. Because if you don't manage your risk and your reward properly, you're gonna blow your account. You're gonna fail. If you have a $500 account, the max per trade you want to be trading is like 2 cents a trade. You know, if you compound your trades 2 cents and then you open another one at 2 cents, that's already a 4 cent position, right?
Yeah.
And some accounts can't withstand that. Some pairs actually like give you different amount of profit. Like if EG, you have a trade on EG, you might be up 20 pips, while on UJ you might be up 30 pips within the same amount of time, because of the currency pair. So you also have to look at that too. Your spreads, your commissions, you have to calculate all of that stuff, bro.
Everything. Yeah.
And then you have a trading plan, I assume, right?
Uh, well, with the trading plan, it's like I know like my risk management. Like if I have a
Mm-hmm.
small account, you use 0.01, whereas trading plan is like, what do you mean? As in like in the trading game, like what I'd use to take a trade, or as in like, you know,
Well, like my trading plan, what I personally consider a trading plan to be is like a like a guide for you, like to help you, like your mom. I'd say
yeah,
my thing is like my mom, bro. Like my mom tells me, hey, I don't want you to go here because this and that, or I don't want you to do that. So it pretty much controls me. My plan controls me from not making stupid mistakes. So if my plan tells me to trade at this time, this is the time I'm gonna trade. If my plan says I'm gonna actually just place one trade today, I'm gonna place one trade. So basically, my plan, what it consists of four pairs, bro. Four different pairs. They do change every week because you can't trade the same pairs every week. There's always different market conditions. There's always
Yeah,
different pairs you want to trade. Do you know how they tell you whenever you start Forex to basically choose one pair and stick to it? To
yeah,
me, that's just limiting your possibilities if you stick to one pair, right? Because you have pairs that correlate with each other, and you have pairs that don't correlate with each other. So you can win either way. You can have one pair that doesn't correlate with the other, and if that pair is going up, well, guess what? You want to sell the other pair because it doesn't correlate, right? And so you can have two winning trades. Vice versa, if you have two correlated pairs, you could trade them both and win both, right? So it does change. My plan does change like from week to week, but mostly it's the same time, the same risk to reward ratio, which is 1 to 3 or anything above that. I don't like doing 1 to 1 because it's pointless, or 1 to 2 because
yeah,
it's still pointless. Even though you do win, it's just pointless because I think it's not like time. How do you say, like, worth your time to just do 1 to 1 when you could do 1 to 3? You know. So
yeah,
it consists of that, and then I do trade New York session every day, like around 6 o'clock, because of Wicks don't lie. They're actually a pretty damn good session, bro. Like they get on there and they do live trades and shit, and I learn from them. So I hop on the 6 hour session with them, which is New York, and then I'm by myself. I trade Asian and London. So I'm up literally from like 8 p.m. Right now I'd probably be asleep, but I'm up, for some reason. But I'll be up from like 8 p.m. and pretty much till the next day, right? And then I'll go
yeah,
back to sleep. But sometimes I'll go to sleep during the session and I make a mistake. I end up missing out on trades because of that. I just get sleepy and I fall asleep, or I just miss out. Um, but yeah, I'd be trading those sessions there. If I do one-on-one sessions with my students, it's like it's on a different time, not trading times, like maybe during the day, because I still work a day job too, so after work I tend to do those sessions because I have nothing else to do unless I'm video editing. But yeah, bro,
yeah.
it's pretty
Well,
much how I get down on the Forex market. I mean, this week, look, I was gonna show you a trade. So pretty much what I want you to remember from today is
yeah,
is Euro NZD. Remember this pair because this pair is actually already on the move, and there could be a possible re-entry here. Look at this; it's in consolidation,
yeah,
2 hour consolidation. So we might have a drop back down here, and then you might want to buy again, or you might just want to wait till this consolidation period is over and then take that buy somewhere
yeah,
here. But just keep this chart up, just keep looking at it because there's a potential setup here. But then I'm gonna show you AU. I'm gonna show you this big ass move that I literally missed out. Shit. That music's not too loud, is
no, nah, bro, it's right.
it? You use Trading View too?
Yeah, yeah, yeah.
All right, look. So we're at the top. This actually already marked. We're at the top of the resistance zone here. We're gonna start from the weekly. So pretty much this trade is actually completed its third wave, fifth
Yeah,
wave actually. This is one wave, then you have three wave, and then you have five wave. And at the end of the fifth wave, it's actually rejecting this zone here. It's actually a pretty good supply zone here. So we might have this candle. This candle might end up finishing like a doji here, and then we might see a red candle. You know what I
yeah,
mean?
like a morning star, some
Yeah,
was it
somewhat. Evening
something
star. Yeah, yeah, yeah.
evening star, yeah, something like that.
Yeah, yeah.
Yeah,
And
that trade.
but the trade I was actually gonna show you is this leg here. this leg.
Wow.
I
Yeah.
missed I missed out on this leg. This push, I actually grabbed this push. I actually opened a position here. I think I closed it somewhere right here because I saw it rejecting this pretty much rejecting this area here. So I was like, that might be a lower high to this high, a lower high, and that we might continue, all the way down here before coming up. But it actually didn't. It actually respected all of this area here, and
Yeah.
it formed a higher low, higher lows, and then a bigger higher low here. And then once I closed it, I saw it push up. I was like, shit, fuck it. I learned from it. I waited for the market actually to come back down here, and then my mentor was like, "Hey, AU is actually getting ready for that second push. You might want to hop on your charts and look." So I did, and guess what happened? I fell asleep, bro. I fell asleep, and I missed out on this fucking trade. And then actually, this is what, like,
How many pips is that?
I think this is like five. No, actually, two about 150, well, 134 pips to be exact, right? So 134 pips. That's a pretty badass move right there, bro.
Yeah, that's a lot.
That's
Yeah.
a good amount of money. But right here on this move, I made like $5. If I would have left it open, this would probably be like $20, $30 trade. But I was like,
Yeah.
fuck it. You win, you lose, bro. You just gotta keep emotions out of it, most importantly.
Yeah.
Once I kept emotions out of it too, I started making better decisions. I started seeing clearly, you know.
Yeah.
I don't use these how Astro FX and Falcon FX, how they teach you to
Yeah.
pretty much use a structure like this. They don't use these zones very much, but they use trend lines a lot, and they spot patterns a lot, you know. So they have trend lines all over the place.
Yeah.
So right here you'd have this rising wedge pattern. At this top you would sell, of course, big ass push. Consolidation, potential double bottom actually, because this is a big ass wick. Pretty nice wick. I like to see wicks like this.
Yeah.
These wicks like this, and like these little small ones, this pin bar specifically, pin bars like this, I like to see them because majority of the time they actually end up bullish. And if it's on a downtrend, it ends up continuing to be bearish. Like this one. This is a nice pin bar. You would have sold here. That's a nice amount of pips. Look at this big ass wick. This definitely tells you that this big ass wick at this level, this 67390, is actually a good level. It's telling you that this level has been respected in previous history. So potentially it might be respected again, which it has. If you look, to your right, you see that this wick, of course, and price kept above this level, false breakout, back into this level, false breakout again, back into this level, all these false breakouts. So and then you see now this is a confluence. This little horizontal line is a confluence to earlier whenever I was saying that it formed a higher low. And you might ask yourself, why did this higher low form? Well, the reason might be is because of previous history. There's big ass wick right here rejected this area, all this area. It rejected this area heavily. So price couldn't even come back to this area, rejected it, and came up. Now we're on the second smaller push because there are waves within waves, right? So there's structure
Yeah.
within structure. So if we look at the weekly, this one push, this fifth push, is actually two pushes on the daily chart. You see that?
Yeah.
So on the wave theory, we have 5 waves on the weekly chart. These are our 5 waves. This is the fifth wave. But on the daily chart, we have 1, 2 pushes already. Well, pretty much 3 pushes because this would be X, 1, 2, 3, potential 4, and then potential 5 up to test this trend line here and into the zone before continuing down.
Yeah.
Because but I do kind of see like a reversal happening here as well. because we have been on a downtrend for quite some time now, right? Forming lower highs and lower lows,
Yeah.
breaking previous structure lows, and now we're at this double bottom here. You see that, right?
Yeah.
You see this double bottom, but usually after the second leg on the second double bottom, price pushes up strong, right? Breaks this neckline here, pushes up strong, retests it, and then continues. But look what it did. It didn't even break it. It actually respected the neckline, rejected it, formed a higher low, came back up, tested it again, said no, and then came back down. Now it's formed already this higher low, higher low. So essentially, this market actually might break to the upside and start forming an uptrend. You know what I mean?
Mm. Yeah. Yeah.
But since we are on a downtrend, we can't predict and we can't assume. We have to see the probable and the possible. That's one thing that actually stuck to me from Falcon.
Yeah.
They're expensive though. I ain't gonna lie. They're not as expensive as
As
Astro,
us.
but they're expensive. You know.
Yeah.
But you see that now that I draw this trend line here, it's not the most perfect trend line, but you see the actual purpose, right?
Yeah.
You know, there's actually if I want to draw a perfect trend line, I would draw it like this. This is how I would draw my trend. I would draw this micro trend, breakout, another micro trend. You see this breakout and then micro trend. So same pattern, trend,
Yeah.
breakout, trend. What happens here? We might have a breakout, right?
Yeah.
Might break out to the upside, or it might respect it and continue down. So we have to wait. This is the crucial part in Forex is being patient, waiting,
Yeah.
right? So we're waiting now. We want to see if we want to validate this as a retest of the broken trend line. What we want to see is we want to see a break of this previous structure high here, right? So we want to
Yeah.
wait for it to break this high to start, validating our upside. If it does break below this structure and it actually breaks this high, this previous higher high and lower high to this high, if it breaks this, then it's telling us it's going to continue down, especially if it breaks this structure here. If it breaks this higher low, it's definitely telling us that it's going to come down.
Yeah.
So that's how I look at the market. I don't do no I use Fibonacci. Don't get me wrong, but I don't use it all the time. I just use it whenever I'm looking at legs. Like for example, this leg here. If I wanted to measure the strength of this bearish move, I'd grab my Fibonacci, right? Drag it from this low to this high, and look exactly we're at 50% of the move. We're at 50% of this move, so it could, it's actually respected the 50% and it pushed up. So this might be an actual retest. This might be the actual retest that we were expecting, you know.
Yeah.
Because if I were to take off this zone, if I were to delete this zone, you're not gonna see the resistance no more, right? Here,
Yeah.
how do I do this? So if I delete that, okay, tell me what do you see now?
No zone. Yeah.
Right? You see no zone, so now you're not you're like, okay, well, price has to come up to this zone here. As a
Yeah.
retail trader, you're pretty much thinking like that, like, oh, it has to come up to this zone here, but no, it might actually, respect it, fuck the retest, and come down, keep breaking down.
Yeah. True.
But you can't confuse yourself either. You can't confuse yourself as well. You have to stay clear. Stick to your analysis. Don't have that analysis paralysis they call it.
Yeah. So like your strategy is based upon like supply and demand zones, if that makes sense, is it?
Major, yes, it is. It's based off of major mirror levels, which is also considered to be support and resistance, and
And
supply and demand, of course, right? But I call them mirror levels because mirror levels are the ones that usually get respected the most, like heavily. So, for example, this zone down here, what would you call that? You would call that support, right? Or you would call that demand. To me, I would call this a mirror level. I would call this a major mirror level, especially noticing that it's on the daily time frame. To me, this is a major mirror level. And look how price came to this level multiple times and rejected it, you know? There we
Yeah,
go.
bro.
Can you see that?
Yeah.
All right, sweet. All right, so the in-depth candle, right? We're in-depth candle analysis. We're looking at each candle. Of course, you wanna watch. You wanna have to have your zones, right? Hold on.
Yeah.
What's going on here? All right. So I'm just gonna draw the previous swing low zone, which this is not the tool. So I'm gonna use this swing low as the bottom zone. Use the swing high as the top zone. And just for more confirmation, I'm gonna draw it to the back. That way you could see that it has been previously respected. So now we're at a second top. So now we're within this zone here, right? So this is our price range,
Yeah.
right? So now we're looking at it like this. We're at the bottom zone. We got 25 minutes left on this candle here. Notice how we have structure forming lower highs and lower lows.
Yeah.
Right, we have lower highs, lower lows. Well, this one is all in general. This is more like a little consolidation area here.
Yeah.
I like this music, so relaxing.
Awesome.
And then we have, lower low. Now at this point, price actually formed a higher low, lower high. This is a lower high compared to this high.
Yeah.
This is a higher low. And if you really want to get down to the candle anatomy, this is a higher low as well. This low of this candle is a higher low. This candle,
Yeah.
this is a higher low as well. But this candle, we can't really say this is a higher low because the candle hasn't finished yet. So we want to wait
Yeah.
for this candle to finish and then determine whether this is a higher low or a lower high. And right now, it actually, by the looks of it, it may actually break up, bro. These candles are strong and it's forming higher lows. And we are at a bottom supply or the bottom demand zone here. If anything, if you wanted to be more precise,
Yeah.
you could actually take this zone here, move it to the actual demand zone here, because this is where price ultimately failed. This to me would be a false breakout.
Yeah.
I would consider this to be a false breakout because majority of the candles are being rejected here in this area. You see all these wicks, this big ass bullish candle here.
Yeah.
So this to me, this area would actually be more significantly important right here. So this is where I would draw it. Maybe not too big, but something like this, right? It doesn't have to be perfect. It's never gonna be spot on, but it's something like this, right? So if we did want to draw another zone, another mirror level, minor mirror level, because this is the 2-hour chart, I would draw it right here. This is another zone that I would actually consider. Not because it's stalling here, but because of all these wicks. This bullish, it tried to go up, failed, broke. Tried to go up, failed, came down, broke, broke, rejected, 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 rejection, rejection, rejection. And then here is our what do we do? You know, let's wait. So you have structure within structure, like I said. So within this 2-hour candle, we go down to the 30-minute, and we have another structure. We have the 30-minute structure. So now you could see clearer 30-minute structure. We have a higher high. So actually, look, we remove this, more clearer. Look, but look at what price is doing. Price already broke the close of an open of this candle here, this previous structure. So let's wait to see what it does. And look at these doji hammers, inverted hammer, hammer, indecision. So let's wait and see. I might be wrong. It might actually reject and drop, or it might test these highs. Let's see. Look at this candle. Look how it's forming right now.
Oh yeah, it's
You see that?
breaking above. Yeah.
So it's breaking previous structure right now. It's breaking the close only. It's not breaking the high. It's not breaking the high of this candle yet. If
Yeah.
it breaks the high of this candle, it's definitely bullish. And then we have this low, higher low here. So we have this higher low. We have this current bullish. Would you consider this to be a bullish engulfing candle, or would you consider this to be just a bullish regular candle?
Well, I would wait for the candle to close, to be honest, first, to
Right,
then
right.
take it as if it was a bullish engulfing.
Of course, yeah, definitely. So
Yeah.
for example, this one's a perfect bullish engulfing candle.
Yeah, that's a perfect
This
one. Yeah.
one, perfect bullish engulfing candle.
Yeah.
Well, actually, no, I'm wrong on this one. This one is not a bullish engulfing. You want to know why?
Which one? Oh, that one.
Well,
Yeah.
actually, no, it is because look, it did open. It opened at the close of this previous bearish candle, so it is a bullish candle. Now, per se, like this one too. Look, it opened. It opened at the close of this candle. So per se, we had this candle. This candle here opened above and then formed. That would not be a bullish engulfing candle because the bullish engulfing candle has to open at the previous close of the previous candle. So it has to
Oh,
open at the close. So this one opened at the close. This one opened at the close, you see, and it closed up here. So you always have to keep those small little details in mind too, because then you might make a mistake. You might think that it's a bullish engulfing candlestick when it gapped up because of price, and then it eventually has to come down. You know,
yeah.
like for example, this drop here. Look how this candle looks so weird. It's green, but it's came all the way down here. So that means that this candle opened. It opened here,
Yeah.
dropped all the way down, came back up and closed again where it opened, and then this candle closed. I mean, opened where it closed and continued up.
Yeah. I can see that. Yeah.
So these candles to me are confusing. I don't ever, whenever I see candles like this, I'm like, I don't want to trade this market. So look at this candle. Retail traders they would have already bought here and would have been like, oh yeah, I'm in profit. Oh
Yeah.
yeah. And then put their stop loss here and put their target up here and been like, okay, I'm just gonna let it ride. And look how this candle's forming. It hasn't even closed yet. We got 15 minutes for it. Hasn't even closed yet. And they probably already opened here.
Yeah. So once that candle forms, would you take a like a buy setup?
No, I wouldn't take any positions yet. Remember, if it were to close right here like this, I want to wait for another candle to break this structure here, retest this structure, and then I would sell.
Oh, okay then.
You
Yeah.
know what I mean? Vice
Yeah.
versa. If this candle breaks to the upside, I want to wait for that candle to close. I want to have another candle come back down here and retest this area just a little bit. Even if it comes back into this area, I want to see it come back up, close above here, and then I would buy. You know what
Yeah.
I mean? Like this candle, this would be a perfect candle. Like let's say none of this happened yet. None of this. We're at this candle here, right? Let's say price is actually currently green. It's not a red candle, it's green. And let's
Yeah.
say price is actually up here right now, right? And then it comes back down, and I think that it's gonna go down, and I open a trade for a sell. I'm in profit, right? It comes back down, I'm in profit. And then it comes back up. Retail traders probably be like, okay, maybe I'm wrong, maybe this is an uptrend because I see green bars coming up. So they exit the trade, and then look, they were right. They could have grabbed these pips right here. But I'm not going to enter that trade until it actually retests. And this green candle here, and look, this is actually the retest candle right here.
Yeah.
This would actually be the retest. You have this, it broke back into the area, closed right there, and then came back up, retested it, rejected with that wick, candle open, candle close. This is where I would open my sell right here at the close of this candle. I would then sell. Once I see it in profit, move that stop loss into profit. Always remember that.
Yeah.
What's so good about trading if you never take no profits, bro? You know, like let's say you're in this, you bought here, you're currently in profit, and you still have your stop loss down here. Why not take that stop loss, move it just a couple pips to break even or a little bit above break even? So if it does come back, you make at least somewhat a little bit of profit, you know?
Yeah.
And most people, like what they do too is they don't move their stop loss into profit, and price comes back down, stops them out, and they lose when they were already winning. Or what they do is they do move it into break even, but they move it into break even way too early. And then they get stopped out in break even or in profit, and then price continues to go up. You feel me?
Yeah.
So, I mean, right now, by the look of it, by what I see price is rejecting this level here, 68992. And then what I also incorporated in my strategies, bro, I don't know if you ever heard the quarter theory.
No, no.
The quarter theory. So basically, the quarter theory is, you know how price moves in different ranges, different amount of pips. Usually, what they teach you, what they say, most people, is that price moves in 250 pip ranges a day. So
Wow.
within a day, it moves 250 pips. Sometimes it moves more than that, you know, depending on the pressure of news and all that shit. So if we were to incorporate the quarter theory into this, we would look for levels like this one, 68. We would do 68.5. That's a half level there. So we got 68.5, and then from 68.5, we would look for 68.75. That's a quarter level.
Yeah.
68.750. That's a quarter level. And then from 68.750, then go 6,900. So every quarter you would put a horizontal line, and you
Yeah.
would, it's supposed well, not supposedly, because it does happen, but it doesn't happen all the time. So whenever it comes to these quarter levels, you want to see how price is rejecting, because these quarter levels are dynamic, pretty much dynamic, support and resistance, supply and demand, and mirror levels. um, they tell you that these levels are the whole levels, and the quarter levels are levels that actually get more respected than other levels, like let's say 68 650, right, or 68 700. If you look at these levels, look, 6900 is a whole level, and what happened, price rejected it here and is rejecting it here now, right? Ooh, look at that. I like that. We got some volume in the market.
Yeah.
You saw that push.
Yeah.
I think this market's actually gonna drop, bro. Look at it. I mean, this is rejection. This candle is clear rejection. And if it breaks this, I'm just gonna look at it. I'm gonna say I put a sell, but I'm not gonna actually execute the order. And then I'm gonna check back a couple minutes later, a couple hours later, see how it did. So I'm gonna go ahead and put this right here. Look, I'm gonna put this. Let's say I took a sell stop loss here, and let's say I want to. This is a 1-to-1 risk reward, by the way. If you look at it,
Yeah.
um, price range about 12 pips. That's not bad. This one here about 28 pips. So this is good. This would be target 1. This would be target 2. You see that?
Yeah.
And then my stop loss, I'm just gonna put it above the wick. But once this candle closes,
Yeah. Yeah.
because we might have more consolidation like this here.
So would that be like a scalp trade you'd take?
Of course, yes. This would actually be a scalp. Anything from I'd say anything from like the 4 hour below
Hourly.
or the hourly,
Yeah.
yes. The hourly below is scalping. Strictly scalping.
Yeah.
You want to be in and out of the market, couple pips, maybe I would say 15 to 30 pips, 15 to 40 pips, and you're out.
Yeah.
Swing trading, you'd be in there for weeks, bro, for days. You're looking for anything from 300 pips above, bro, 250 to above, anything like that. If you do catch 150 pips, that's still badass. I mean, that's still gold, bro. Thank you
Yeah.
for your time, and I guess we'll see
Yeah.
you on the next one, man.
Yeah. You too. Enjoy your